Haney, let's go to you first. Give us the case for the bull argument. And to be specific, do you think that this is sort of a bounce within a bear market, or do you think that this is sustainable? There's actually some conviction here.
Good morning. Good morning. Look, we have not seen any fundamentals deteriorate yet. So far, demand has been strong. There has been no price elasticity. Consumers and customers and enterprise customers specifically are still buying. So we haven't seen any cut in demand. All we've seen so far is a cut in valuation, which is probably rationalization that's been long overdue. But we haven't seen anything yet on the fundamental side that gets us to be a bear.
Brent, what would you say about the fundamentals? I mean, we've just come off a week where we've seen the retailers raise some concerns about consumers, and Cisco about the macro picture, Snowflake and NVIDIA as well to some extent. You're the bear here. What are you seeing?
Yeah, fundamentals are deteriorating. Workday, Snowflake both called out things. Our deals are pushing, and we're not even into the full pullback of the economy. So we ultimately believe that there's going to be a cut. We've already cut ahead of what we think is going to happen. As Haney points out, valuations have come in, really hard. So we think ultimately a lot of this is baked in. The IGV, the software index, is down 27, 28% year to date. Many of our stocks are down 40 to 50, some cases over 60%. So we've seen multiples go from 19 times forward revenue in software to 7. We can see trough at 5. So we've said there's still 20% down, but we've had quite a fall. So I think selectively the call is to be picking away. But make no mistake, companies are seeing fundamental weakness. We've heard it in earnings calls in the last week. And ultimately, I think it's going to get harder as we head into a potential pullback in the overall economy.
Yeah, that's interesting, Haney. On that point, I wonder, people are still trying to draw threads through all of the macro commentary, through Workday, through Snap, and try to figure out what's going to happen with Salesforce tonight. I wonder if you think CRM has the power to either ratify or negate a lot of what we've already heard.
Right. So, look, I think from the fundamentals perspective, I look at things like what's going to happen. There may be slight waning in demand because of the news and the demand cycle around inflation and what's happening. But fundamentally, I think these have already been captured in estimates and potentially even valuations, more so on the valuation side. When Brent talked about valuations being cut for software from, I think a high was 40 plus times forward revenue, now back to a more normal rate of, somewhere between 5 to 7 times forward revenue. I think these valuation cuts are reflecting a potential slowdown in what's coming. So I think it'd be interesting to see what Salesforce does tonight. But my guess, it's not going to be a dramatic release.
Yeah, Brent, it is interesting to read some of these reports of channel checks still solid in the case of Salesforce, but maybe with a little bit less of the historical upside before print.
Yeah, they're softer for sure. Things are slowing. You can feel the tension in the checks that we do. Ultimately, to Haney's point, the stock is 4.5 times the revenue. I mean, it's one of the cheapest spots. Salesforce typically troughs at 5, so we've gone through trough. So for us, Salesforce looks really attractive. The setup is a difficult one for them. This is their toughest comp of the year right now. So we think the risk is, do some of these large deals they close get brought down into smaller bite-sized chunks? The elephant to antelope analogy of cutting the transaction size down. But I think most investors are bracing for a guide down. And ultimately, if we don't see that, the stock bounces off of 4.5 times. Even if they cut a little bit, I still think we've got a valuation floor put in for Salesforce.